You're watching Clean Skies News. I'm Tyler Suiters, along with our energy market analyst, Elliott Gue of the Energy Strategist and the Energy Letter. Elliott, good to have you back with us, sir.
Good to be here.
It's the end of the week. That means we're talking weekly petroleum reports. Let's start with the EIA's update on natural gas. Storage 14% above the 5-year average right now. Despite that, prices are still going up.
Yeah, I think there are a couple of factors at work there. One is that it's not quite as far above average as it was just a few weeks ago. We've actually had a couple of several weeks in a row of lower than expected builds and inventories. It's normal to see gas and storage build this time of year, but there is some thought also that there's going to be a hot summer, and that's going to drive also higher gas demand. The other thing I think with gas is that oil right now is sort of tainted with this whole Deepwater Horizon spill, so a lot of investment attention is being shifted to natural gas. There's some thought that maybe natural gas would be part of an energy bill to pass later on this year or next year. So, gas is just getting a lot more attention from the investment community over the last 3 or 4 weeks.
We touched briefly this past week at the $5 mark, went above slightly, and it's hovering right around there as we close out the week. Is this hitting 5 sooner than you expected in terms of the rebound that we had talked about during the summer and spring months?
I thought it would rebound. I thought we might be able to hit sort of $6 towards the end of the year, but yes, this is happening a lot faster than I had expected. I thought maybe we would see a bigger spike in the latter part of the summer as we get into the heart of hurricane season. And as we really start to get into the really hot weather in the summer and the high cooling demand, so it's happened a little sooner than I expected, and I think a lot of that again goes back to the what's going on in the Gulf.
One of your mantras or market principles that we always talk about, seemingly, is that the market goes in the direction it wants to go. I think a good example of that right now is where oil prices are. Despite the disaster in the Gulf, they begin to climb this week.
Right. Despite the disaster in the Gulf, a worse than expected employment report at the beginning of the month, a bad retail sales report a couple weeks ago, a bad Philly Fed more recently. All of these factors, tend to suggest that the economy is slowing down. Now, there are other factors out there which suggest that it's still okay, but that had been the concern that drove oil down from its highs in the 87 range down into the 60s. But since then, despite bad news, oil has consistently rallied. It even rallied in response to some fairly weak inventory reports. So that's a sign that there is underlying demand for oil in terms of investment demand. And whenever I see a market, and sort of to your point, whenever I see a market that rallies on bad news, that's a sign that that's probably already priced in and that there's underlying support out there.
What does that say to you about the strength of the dollar right now and also the perception of the international monetary crisis?
Well, it's interesting that, if you told me that the euro would be falling as much as it has so far this year, from highs up sort of over 150 down below 120 at one point, the natural reaction if you told somebody that, say, 6 months ago, would be that oil would be a lot lower than it is today. I mean, we're only about, $10, $12, $13 off the high for the year, the recent high. Yet the dollar has been very, very strong. So I think that's a sign of some decoupling where for a while there, every move in oil seemed to be driven by currency. Now you're seeing oil rally sometimes even when the dollar is reasonably strong.
Elliott, final question. This past week we saw hearing after hearing regarding the BP spill. On the House side, Tony Hayward himself was in front of one of the subcommittees on Thursday. I wanted to ask you about what's going on below the surface. So 2 million gallons or more coming out per day. How much lost production is BP dealing with right now? In other words, how much could this leak represent in profit? What could have been for this company with this particular drill?
Well, if you look at it, they're capturing still out of this well, even though obviously they're capturing it using, not an ideal method.
And burning it off.
Exactly. They're capturing sort of 15,000 barrels a day, which is a lot of oil from a single well. So this appeared to be a pretty major discovery, at least in the size of several of the other big discoveries that have been announced in the Gulf of Mexico over the last few years. So I would guess that just very roughly that this is probably that reserve, if it had been tapped and then correctly developed in a over time, it would probably be worth as much as $1 billion or more in valuations for the company, maybe even more, because we don't really with 1 or 2 wells you have no idea what the size of the field is, but the fact that so much oil is coming from this well each and every day, is a sign that is probably a pretty big reserve.
Yeah, we'll see what that news from you and analysis does to BP stock shares, which had a bumpy ride this week, too.
They absolutely did.
All right, Elliott Gue is with the Energy Letter and the Energy Strategist. Thanks as always, Elliott.
Thanks for having me.
And thank you for joining us. I'm Tyler Suiters, and you're watching Clean Skies News.